We are at Uber's headquarters this morning. Uber reporting first quarter results just this morning. The stock up, by the way, over 8% on the back of this news. The company reported a loss of 8 cents, but it's better than the 9-cent loss that analysts had been expecting. Revenue coming in big time ahead of expectations, $8.82 billion. That's up 29% year over year. And joining us right now, first on CNBC, is Uber's CEO, Dara Khosrowshahi. It's always very good to see you.
Great to see you.
Get a sense of what's going on with your business and also a sense of what's going on with the consumer at a time when I think there's a lot of questions about the consumer. So let's sort of walk through it. As I just said, the numbers, I think, a lot better than had been expected, up 8% in terms of where your stock is now, just on the back of this news. What are you seeing? Where did you see the strength, and do you think it's going to hold up?
Well, I think the good news for us is we are seeing strength across the board, Andrew. And remember, the consumer, while there are worries about the consumer spend has been strong and has been especially strong in the services sector, right? Consumers are buying less stuff, and you see it in the numbers, but they are going out to events, they're going out to restaurants, et cetera, and it showed in our numbers. Our gross bookings were up 22% on a constant currency basis. Our trip growth accelerated versus Q4. Q4 growth was 19%. Ours accelerated to 24%. You don't see that many large companies accelerating, actually, in terms of growth.
So that's on the mobility side. That means that people are actually getting into
that's
the
total side. That's both mobility and delivery combined.
That's what I was going to say. The delivery piece is still strong.
Yes.
It's still up, but it's not up the way it was in the pandemic. And there was a period of time where people thought, my God, this thing could go to the moon.
Yes. Well, I think that if you look at parts of the business that benefited from the pandemic, delivery actually has been one of the most sticky, right? A bunch of those businesses were down year over year. But if you look at our delivery business, we were up 12% on a constant currency basis. The business accelerated as the quarter went along, so we think gross bookings will be even more robust going forward. Our delivery business is churning out profits effectively, and we gained category position in 9 out of our 10 markets.
You just said it's churning out profitability? Are we profitable yet?
Yeah, actually, it's 240 million plus in terms of EBITDA profits. Incremental EBITDA for every dollar of gross bookings we add of 20% this last quarter, over 20%, which is well above what we committed to investors.
In terms of being GAAP profitable this year?
It's happening.
It's happening. When should we look at our watch?
Well, it's going to happen sometime this year. And remember, Andrew, we committed to be EBITDA profitable 2 years ago. We hit it ahead of schedule. We committed to be free cash flow profitable. We hit that ahead of schedule. We had $549 million of free cash flow in this quarter, and we're committing to be GAAP operating profitable this year.
You put out a 3-year plan. I don't know how long ago now, but you were way ahead of it. I think everybody would say that. When do you update the plan and therefore upgrade the plan?
I think we're halfway through the plan at this point. And
we had a target.
We had a target of $5 billion in EBITDA, and we're well on track to exceed that, I think. But we're halfway there. Give us a couple more quarters, and then we'll decide as to whether we put another long-range plan in place.
In terms of the consumer and the strength of the consumer, are you seeing anything in regard to people who might have, used the black service and they're downgrading to X or something like that? Is that happening?
We're not seeing that at all. Actually, we're seeing the opposite based on some of the innovations that we're bringing out there. So, for example, we built a new reserve product. The driver shows up, we'll wait for you up front, et cetera.
This is old school. This is like what people used to do before they went to the airport. They'd say, I need a car. I need it to show up at 7 a.m. in the morning. And now it shows up.
Exactly. It shows up and you've got some time. And what we're seeing is 20% of our airport drop-offs are now reserved. And this is a product that didn't exist, 24 months ago. Right. So for a new product, that's pretty extraordinary, for 20% of airport drop-offs being this new product. So the innovation as we build products that connect riders to drivers more effectively, driver makes more money, the rider has reliability, and so everyone wins.
You just mentioned the airport. That was a big growth driver for you, people just going to the airport. This is sort of in a post-pandemic universe. What's that look like now?
Continues to grow. Travel is one of our fastest categories. It is not slowing down at all. And I think if you heard from the airlines, they were pretty optimistic on a forward basis in terms of travel. And we're seeing the same in our business. Travel, workday, and commute, people are actually getting back to work. They're going back to offices, not all of them, but all of those were strengths within our portfolio.